In this video, I'm going to give you 20 years of trading experience compressed into one video. I'm going to give you the exact playbook that I use to find high probability trades. And as always, like I do on this channel, I'm going to do that using my real life trades. Once you see what I'm about to show you, you'll never look at technical analysis the same way. Here's the truth. Trading does not have to be complicated. In fact, I like simple. And if you ask any trader who's been around for a long time, they'll tell you the same thing. Their strategies are not complicated. They're typically very simple. So I'm going to show you a simple one that's worked for me over and over and over again. Although the market is constantly changing, if you have a strong, simple strategy, it can put tons of cash into your pocket every single month. So what's my approach? Well, I'm two things. I'm a fundamental and a technical trader. In this video, I'm going to focus on the technicals. Although I love to trade in undervalued companies, I know technicals are the key to being successful, especially as a stock and option trader. Let me show you a simple technical strategy that I use every day that I make a trade. When I'm doing trades, I'm looking at several charts. I'm looking at the hourly chart, the daily chart, and the weekly chart. If those look good, I then look at the 2-minute chart, but for the sake of simplicity, I'm going to share the strategy on the daily chart. To help explain this technical setup I use, I'm going to share with you trades I did in SMCI. Here you see a daily chart of SMCI when I first sold some put options and bought call options against it. Notice that overall it had been in a decline. But that decline appeared to be slowing down. Now why do I say that? If I connect our highs, notice we're making lower highs. But notice what happened right in here. Notice we broke through that downward resistance line. At that point, SMCI began to kind of trade sideways. Because I felt comfortable dealing with SMCI at this price, I decided to do a trade that combined two strategies. I sold a longer term put option and I used that cash to buy a longer term leaps call option. I got that call option for free. So here's my note for you. Trade number one was on January 22nd. I did what's called a risk reversal. That's simply selling a put and buying a call. And my main reason from a technical standpoint is that it broke my downtrend. Now what's interesting is I did this trade before it actually reversed. You see, I was trying to catch this trade when I was kind of close to the bottom. So as soon as I saw it break this downtrend here, I was then watching to see if it was stabilizing. And I watched it for several months. Notice it broke this downtrend back here in December. I didn't place the trade until the end of January. By that time, I felt pretty comfortable that it had at least slowed its downward decline. But as you see in this top resistance line, it was still in a downtrend. So here's the actual trade that I did. On January 22nd, I did what was called a risk reversal. As you see here, I sold 3 of the December 18th options that expired almost 2 years into the future, and I sold them at the $13 strike price. I picked that because I'd be very comfortable if I had to deal with SMCI at $13 per share. But for all that premium I received, I bought a longer term call option. I bought that same expiration date, December 18th of 26, 75 call option. And I still walked away with a credit of $65 minus commission. At this point, SMCI was trading for around $34 per share. I sold the put option way down here, right at this previous level of support. And notice this downward sloping trend line right here that had been serving as resistance for it. Well, if SMCI came down, I expected that to find support. So I felt pretty good about that $13 strike price because it was way down in here, even below this previous level of support. So I've sold that put option to help fund buying a call option, and that call option was up in here. So the next question is, how do I use technical analysis to know when to either get out of this trade or to adjust this trade? In this case, I wanted to get rid of my risk, which is those put options that I sold as fast as I possibly could. So how can I use technical analysis to tell me when to get rid of that risk? I'm going to show you how I did in just a second because again, I did it for free. In fact, I got paid to get rid of that risk. But here's the next technical analysis trick that I use. It's very simple, as you're going to see, and I use this to adjust my trade. And the timing was almost perfect, as you're going to see once I fast forward the chart to the day after I did this trade. So here again, I have a nice trend line. I connected my highs and lows and I actually did this on the hourly chart. Now, first of all, going back here when I entered it, I waited until SMCI had a nice run up. Remember, I entered this trade on the 22nd of January, and by this time it had a nice run up. It gone up almost 80%. Yes, I had to go through this little down move right here where it actually came in lower than it had the previous wave, but overall I still felt comfortable because it broke this downtrend that it had been in. In addition to that, I saw these put options way down here at $13 per share. So I felt really good about that. So I was in this trade for 29 trading days, or right at a month. Right in here, I started getting really interested in adjusting this trade, but I didn't want to do it too early. So how can technical analysis help me to know when to get out? Well, a simple uptrend line. And I did this on the hourly chart, but basically I connected the lows of this. And my trigger was when it broke that upward sloping support line, I was going to adjust the position. And that's what it did right here on the 20th. So on February 20th, this is the trade I did. I bought to close those $13 put options. As you see here, that cost it $1.98 per share. And in order to walk away with a credit, I funded that by selling the December 18th $100 call option. Now that one paid me $16.56 per share. So if you do the math here, I walked away with over $1,000 in my pocket, even though I closed out my risk side. And here you see the note I share with my patrons. I told them we now own the December 18th $75 call option, and we've sold the $100 call option. So that $100 call option, it was not naked. I was not exposed. And in fact, I had the potential to make the difference between the $75 call option I own and the $100 call option that I sold. So that's another $25 per share I could still potentially make on this position. All right, so my risk is gone. Those put options that I sold, that's closed out. No more worries. And I've already realized nice profit. Remember I got 65 cents or $65 when I entered this position? And then now that I've adjusted it, I've received over $1,000 more for adjusting this position. Now it's time for me to sit on my hands and wait to see if SMCI gave me another really easy, simple technical setup like it did the first time to do another trade just like I had just closed out. And that's exactly what it did. About 2 weeks later, it had come back down. So on March 11th, I did another risk reversal in SMCI. Again, it simply means I sold some put options and I used all that premium to buy a call option. Keep in mind where the stock is trading at. It's trading for right around $40 per share. And here's the trade I did. I sold the January 15th of 27 $13 put options. Those options expired in just under 2 years from the date that I did this trade, which was March 11th. I had to sell 5 of them to get enough premium, but I used that premium to buy the SMCI again January 15th of 27 $75 call option. So here's the math. In so doing, again I walked away with a nice credit. I got $80 for doing this position. Now that I'm in this risk reversal, I'm hoping that it goes up in price, and I believe it will because it came down to a support area. In fact, something I wanted to add to this chart for you is the reason why I did it. Notice I connected my highs right up in here, and notice the day that I did this trade. I'm extend this resistance line right in here. I was waiting for it to break this downtrend again. Now it slowed down right in here, but I wanted to see it break that trend line. That's exactly what it did on the day that I entered this trade. Well, when is the right time to adjust this position? What do you think I did? I did something similar to what I did in here. I waited for SMCI to go up in price. Now I fast forward the chart to the day that I adjusted this trade. Remember, we entered it back in here. We did this risk reversal in here. Notice what happened. SMCI just kind of traded sideways. In fact, it kind of drifted lower. But again, our $13 strike price put options were not challenged. The lowest it got was around $27 per share. But then it began to find support right in here and again in here. And things were starting to look good because that support was holding. So now I'm just looking for a jump up in price for me to, again, buy back that risk, buy back those put options, and fund that by selling a call option above the one that I own. So SMCI hadn't had as big of a run up, but it had enough of a run up for me to get rid of my risk. So on May 15th, I adjusted this position. Here's the trade I did. Again, I bought to close my risk. I got rid of that risk. I bought the SMCI January 15th, 13 puts. And I paid for that by selling a call option above the $75 strike price call option that I own. I sold that same expiration day, January 15th of 27, $90 call option. In this case, I didn't get as much money, but I did get $55 more for that. And the reason I was willing to take less is that it took 2 months for me to close out this position for a profit. So I didn't want it to come back down and miss the opportunity of adjusting this. But again, the reason I adjusted it is because it broke its uptrending support line. Now guess what I did next? I looked for an opportunity to go back in and do this for the 3rd time. And guess what technical indicator I used to do that? Again, a resistance line. As the day started passing, I was able to draw a nice, clearly defined resistance line. And then I was just waiting for it to break that downward sloping resistance line. And I didn't have to wait long. It was less than 2 weeks. And so on May 17th, I entered a new risk reversal position in SMCI. Here you see that trade. On May 27th, I sold the same expiration date, January 15th of 27, the same one as the last trade I did. I sold the $18 put option. I only had to sell 4 of them to get enough credit to buy that same January 15th $75 call option. But in so doing, I pocketed $95 for this trade. By now, you probably know what I'm going to say. How do I know when to get out of this trade, or how do I know when to adjust this trade? Now what's interesting is what happened the next couple of days after I entered this risk reversal. Notice that support did hold, but notice where it found support. It found support at that downward sloping, what had been resistance line. Remember, resistance once broken through turns into support? That's what happened here. It also found support at the green 50 moving average, which also coincided with this previous area of resistance right in here. That now turned into support. So I knew at that point we were off to the races. Now it's just a matter of time before I could adjust this position. So here's what SMCI did. It kind of traded sideways, but notice its highs were getting higher and higher and its lows were slowly drifting higher. And it was continuing to find support at this green 50 moving average. So I just stayed with the position and notice what happened. It continued to go higher, form higher highs, higher lows, I just want to mention something to you here. I did not draw this line in here for you. This line was drawn when I was looking to do the trade. I just left it in here. I forgot to delete it out of there. So this is the exact reason why I adjusted this trade. All right, so let's assess where we're at. We've been in this position now right at 2 months, almost to the day. The stock is up about 40% from where it was when I entered this last risk reversal. But what happened is, again, I was able to draw an upward sloping support line. And I did this on the hourly chart. Once I had a nice advance, I zoomed in on my time frame. I wanted to trade on lower time frame charts because I wanted to get out as soon as it broke that support line. And that's what happened here on Monday, July 28th. Because it broke my support line, I did the following trade. Guess what I got rid of? I bought to close that risk side. I bought to close a January 15th of 27, $18 put options. And guess what I paid for it with? The same expiration, January 15th of 27, $90 call options. And this time I got nice premium again. I got $500 for this position. And remember, I still own the $75 call options with the same expiration day. In just a second, I'm going to show you my actual position in SMCI as of today. But I wanted to show you the power of this very simple strategy of using support and resistance lines to enter and exit trades. Now remember, we exited right here on July 28th. Notice what happened as I fast forward the chart. It broke resistance and then it just absolutely broke down. So at this point, guess what I'm looking to do? I'm looking to enter a new risk reversal in SMCI. And actually, if I fast forward all the way to today, I think I kind of missed a good opportunity last week. And the reason why I say that is notice my resistance lines. I drew it starting here into this other high here. Notice we had a lower high here, had another lower high here. So I connected those and extended it. And notice what happened 3 trading days ago, right in here. That's the day I probably should have entered a new risk reversal. Now today is Sunday and we'll see what happens tomorrow. But because I had a really busy week this past week, I missed this trade here. So we'll see if it comes back down and gives me an opportunity to go back into a new risk reversal. Do you see how using this very simple technical strategy can help you time your entries and exits almost perfectly? As a result of using that simple technical analysis tool, I now have 3 free bull call spreads in SMCI. And here's where they're at as of today. Overall, my unrealized profit in these legs is over $1,200. And if SMCI continues to go up over the next year and a half, these can really become some extremely profitable trades. And the only reason I did it is because number one, I felt like at $13 or $18 per share, SMCI would be very undervalued. And number two, I used the technical analysis trick that I share with you in this video. This is an extremely simple yet very powerful tool that you need to learn. So if this was a lot for you, go back and watch the video again. If you learn this technique and you learn the way to use support resistance trend lines and the break of those trend lines, it can really give you a big edge on a lot of other traders. And one thing that's cool about this is you can do it on any time frame chart. The 2-minute, the 5-minute, the 60-minute, even the weekly chart. If you want to get a lot of practice in, practice on just the 2-minute chart. That'll give you a lot of reps really quickly. If you'd like to get an alert whenever I buy, stock, or sell options, check out the benefits of becoming a patron down at the link in the description below. The trade I share with you in this video is called a risk reversal. It pays you up front to take some risk, and then if the trade goes your way, you can adjust it to take all that risk out of the trade. But if structured properly, you can also line yourself up to get an even bigger win down the road. If you want to see how to use risk reversals to take lower risk, high potentially profitable trades, check out the video at the link above and the description below entitled My Stock and Option Trading Secret Weapon, Risk Reversals. Until next time, happy investing, and we'll see you again soon.